Here we go again. Hello everyone, welcome back to the Relai Bitcoin Podcast. I have a very, very special guest today. Jimmy Song is joining me, who is into Bitcoin like for probably plus 10 years. And I've seen him, actually you're at every conference. I feel like at least at every conference I am, you are there as well. And you even been to Innsbruck, the biggest German-speaking one last year. This was actually just the second episode was just this weekend as well. It was great. You were not there, unfortunately. How did you get into this German-speaking? Because you were one of the only English-speaking guys there. This must have been a bit strange.
Yeah, it was a little bit strange. At least when I was there last year, I think there were 3 presentations in English. One was Michael Saylor, another was Safety in a Moose, and the third was me. And the other 2 had done so remotely. They weren't actually physically there. So I was the only physically there speaker that did it. But yeah, I was traveling through Innsbruck as part of the world tour that my family was on, during the school year last year, and I got connected to the organizer, and I knew I was going to be around that area, so it worked out. Really enjoyed it. I had no idea there were so many German Bitcoiners, and that was a beautiful thing to see. I think that's the direction we're going, especially as these Bitcoin only conferences proliferate. There's some insane number this fall. I think I counted something like 12 or 13. So I think they'll start becoming more localized, right? More geared towards a particular audience, and I think it's great.
Right. What is your job description right now? Or just traveling? I know you're traveling a lot together with your family. You are at pretty much every conference. I said you're obviously a speaker. You are an educator. You are writing books. This is not the first book that you've written. You've written tons of books about. But obviously, you're a Bitcoiner. Like, what is your daily, procedure? What are you doing?
Yeah, I don't really have a job title, and just to be clear, we stopped traveling in June, so we went from September to June last year to go all over the place, including places like Innsbruck and Vietnam and Argentina and all those places. We hit a lot of countries. But I don't really have a job description because I don't really have a job, right? I have lots of little things that I do, and this is something that I talk about in the book a little bit, is that we have this fiat mentality, and most people have only one customer. It's the company that they work for. And this is a very strange thing historically. Most people had lots of customers, and that was much more the norm. If you had a trade, if you were a cobbler, for example, you repaired shoes for lots of people, not just like one particular entity. And this is one of the sort of outgrowths of fiat money. Is there is a large companies that essentially take over the economy, and most people end up working for one of those companies, and it becomes the norm to have only one customer. I've very consciously tried to get away from that model. My last fiat job was 2017, and since then I've tried to have lots of customers, lots of different lines of businesses, and I guess the title that I go with now is just Bitcoin expert, and I do lots of different things. Being an author falls under that umbrella. Speaking at conferences falls under that umbrella. Teaching, technical Bitcoin stuff falls under that umbrella. So, I think that's the way to go. And I love seeing people do more of that. I think Lisa Naygood, for example, is totally doing that. She works for Blockstream, but she also has her own Base 58 Labs and all this other stuff, which I think is great. That's the kind of life that we want Bitcoiners to have, because if you're working for a particular company, then you're always in some way sort of you owe them something, right? Including your beliefs, opinions. It's all very fragile. So people do everything they can to keep that. So I try to do my own thing, and I hope more Bitcoiners do.
I think every Bitcoiner is kind of doing this, like trying to educate people, trying to orange pill people. Some of them come up with their own website, some of them write blogs and do some social media posts. Almost everyone is doing that. Just not everyone. Most of them are not doing this full time. Most of them have a full-time fiat job, or maybe even a full-time kind of in the industry job like I do, for example. But the cool thing about the people like you and, for example, Andreas Antonopoulos as well, I think he was maybe the first one who really did that, like as a full-time job, being a speaker.
Yeah, he didn't even have a home for a while. Right? He just traveled conference to conference, and he wrote a lot of books and stuff. And no doubt he was an inspiration. But there's a lot of other ways in which you can, like make a living. And in a sense, this model of having a job at a large corporation is a very fiat thing that's really come in the last 100 years or so, where people feel kind of trapped. This is why we have labor unions and things like that, because they only have one customer. Then the customer more or less has all the leverage. The natural way of doing things is that you create a good service and you have lots of customers, and there are people that are getting into that, and honestly, this is what entrepreneurship is about, and it's unfortunate that most people don't exercise that muscle. I was reflecting with some people at Bitcoin Park about how many people want to get into this industry, right? They want a Bitcoin job. And the thing is that I think that's the wrong sort of mindset, because you're just asking for another master. You're kind of going from one fiat mentality to another. I think the real thing that needs to happen is Bitcoiners starting a lot of businesses, right? That's how you create a really decentralized economy where there's a lot of options and a lot of people trying stuff and so on. Unfortunately, most people haven't exercised their entrepreneurial muscles. I suspect that most of them lack the courage to do so, not necessarily the knowledge. The knowledge is all out there. You can go watch like 20 YouTube videos and maybe read 5 books, and you'd be all set to go. I really don't think it would be that hard. You maybe need to learn a little bit about sales and negotiation and marketing, along with whatever product that you're providing, and that's probably enough. You can probably get the knowledge relatively quickly. It's the thing that's hard for most people is that they don't want to take risk. They've grown up in a fiat world where all risk is sort of taken out away from them through government safety nets of one kind or another. So they've not really had to exercise courage and try something on their own. But that's the sort of direction that we need to go to. It's part of why I wear the hat. It takes courage to go out west. It takes courage to go out to the frontier and do something. But that's where I think people need to go, because in a sense we're stuck in a fiat economy where everything is safe, but like the returns are getting less and less because the Cantillon winners are taking all of the fruit of your labor. So they have all of the leverage and they're using it. We need to start our own businesses. We need to create our own goods and services. That's the direction that I really feel like we need to go. It's a long roundabout way of saying that I'm trying to live out that ideal. And I hope more people do as a result of reading this book and many other things in Bitcoin.
100%, especially since we have the internet and basically all the information available in one click. It's all about, it's just about focusing your time. What are you focusing your time on? Are you focusing, doing 10-hour days at corporation and then basically be, you're dead, you get home, you watch some TV and you take a shower and you eat something and you go to bed? Or are you basically just, focusing all of your time in trying to build your own business, as you said, but it takes a big leap, leap of faith, and you did this jump in 2017. You said, what was your last full-time job?
Yeah, so I was working at Paxos, and I was I guess senior architect or something like that. And I got to be honest, it took me about a month of working up the gumption, right? Working up the courage to actually go off on my own. Because like probably many of the people that are listening to this podcast, I had held different jobs at various corporations. Now, most of what I, worked at were startups, so maybe that's a little bit different. But I didn't found any of those startups. Well, there was one where I was a co-founder, but the other guy really started it. And I had a salary and I had all this stuff, and I really only worked on I was at like one job at a time. And it was scary to go out because I had to try something in the market. I didn't know if people would want to take a class that I would be offering. I didn't know if I would fall flat on my face, or if people would just sort of think it's completely useless. But this is where savings comes in, and this is where Bitcoin is so useful. Is that I had saved up enough money where I knew that I could try this for about a couple of years, and if I completely fell on my face, I could always go back to a fiat job.
Of course.
And it took a month of sort of convincing myself to do that. And for people that have been in, corporate roles or whatever, like it's, they make things very easy, right? Like you get a salary, you get health insurance, at least in the United States, you get all these benefits, and the money just sort of hits your bank account. You don't have to worry about a lot of stuff, and it's extremely easy. They make it about as easy as possible. You become an entrepreneur, now you have to worry about all this other stuff, right? Like, what am I going to do about health insurance? What am I going to do about a car or mortgage payments, like the income isn't steady or whatever. And this is where savings really comes in to help you sort of mitigate a lot of that. And that's the whole point, is it's there for some of the uncertainty that's inherent in life. And so that's how I sort of justified it in my mind. And I realized almost immediately, as soon as I started this business, programming blockchain and teaching developers about Bitcoin, right, the actual protocol, which eventually became my first book, Programming Bitcoin. But that doing that was just so much more satisfying. I don't know if you've ever taught before, but my experience teaching before that was really different than the teaching that I did in the course that I was selling. Because in most contexts of education, you get students that don't want to be there. Yeah. But because I was selling a good to the market, and I was charging a lot of money, the people that came were extremely enthusiastic about the topic. So it was actually really pleasant, because they wanted to know all of the details, and I knew it, and they wanted to get good, and they wanted to understand it. And it was my job to sort of lead them down that road. And I was like, this is just so different than every other sort of educational environment where you have people that don't want to be there and so on. This is what education should be. Mm-hmm. And that was so much more satisfying. And being my own boss and trying different things was just so intoxicating. I determined about a month or two later that I could never go back, because it is just so freeing, and you get to try different things, and you're not put into a box. And you're a coder, so why should we get you to teach, right? You're a coder, so you're not going to be like writing a blog or having an account on Twitter. We're not going to pay you to do any of that stuff. Worse, it was, you really shouldn't say that on Twitter because it might reflect badly on the company or something like that.
Hey everyone, this is Anna from Relai. I want to tell you about Relai Private. It's our exclusive service for private clients, family offices, and small and medium-sized companies looking to buy or sell large amounts of Bitcoin. As a Relai Private client, you have a full team focusing on your needs. A dedicated account manager guides you every step of the way. You also get personalized 24/7 support and gain access to exclusive reports and industry insights created by Relai. If that sounds like something you or somebody you know should check out, click the link in the description or head over to relay.app/private.
Like those things were very restrictive, and I realize now that so much of me was wrapped up in my identity as a worker for a particular company, and getting freed from that it really felt like I was freed from intellectual chains, like the restrictions of the fiat life, and this eventually led to the publishing of the current book, where I try to lay out all of this stuff and try to encourage people, go be an entrepreneur, go start something, go make something, go provide value to the market, because it really is much more satisfying when your good or service is used by other people and they appreciate it, and it's a trade that both people are satisfied with. This is how the markets are supposed to work, instead of you trying to scam the company and the company trying to scam you. Like there's this like mutual scamming going on that's not satisfactory in the least. But we all do it. It's like, all right, how do I get paid just a little bit more? And the company's like thinking, how do I get them to stay a few extra hours? And how do I dangle this carrot in front of them so they work that much harder? And it's two parties trying to scam each other instead of two parties trying to satisfy each other, which is what a market transaction does. So that was I think for me like a big turnaround point, and the journey I've taken in Bitcoin since.
So the two parties are scamming each other, and both get scammed by the government as well.
Well, I argue in the book that companies are really extensions of government at this point. And you can see it because every major industry has maybe 4, maybe 5 big players, at least in the US. In Germany, it might be even less. It's maybe like 1 or 2. You have Deutsche Bank. Well, like, how many other banks do you have in Germany, right?
Maybe Commerzbank, and then that's it.
Yeah. It's like 1 or 2 in a lot of smaller countries. But you get 4 large companies that control everything. You look at agriculture. It's like 5 big ag companies and like 5 food producers or something like that. You get 5 health insurance companies. You have like 5 accounting companies. Any industry that you can name, there's like 5 big ones, and that's it. And the way they get big is through Cantillon effect. So the dynamic at play here is that the bigger you get in a fiat economy, the more advantages you have. And that's because you have more access to newly printed money. Now, that newly printed money for a company comes in the form of corporate bonds. And corporate bonds, when you issue them as a company, they get bought up by big banks. And those banks are printing money out of nothing to buy those corporate bonds. They put them on their balance sheet and just create money out of nothing. As long as they meet the reserve requirement, nobody cares. And now that the reserve requirement is 0, they could effectively buy as much as they want. So they have access to the corporate bond market. If you think about like these big banks, the reason why they fund the giant companies is very simple. It's just less work. If you can give out one $100 million loan, right, in the form of buying their bonds, or you can lend out $1 million to 100 small businesses, like, which are you going to do? Like, there's no question. You probably take a discount to do a single $100 million thing. And you also know that the government will backstop the $100 million loan much easier than the $101 million loans. If those go bad, you're out of luck. But the $100 million loan, that starts becoming the government's problem. They're going to start having to think about bailing out. So all of the institutional momentum is towards these large companies. They get all of this money, and then they go and use it. So how do they use it? Well, they can underprice the competition because they have access to money that everyone doesn't. This might be sort of to be charitable. You can just scale up, right? You can produce 1 million units a lot cheaper on a per unit basis if you scale up. You can make a factory, and you can amortize the costs of your capital equipment over many more units and so on. But that's not the only thing. You can underprice them your competition below the cost that you might even have, and destroy all of the other small businesses. And a lot of them might go out of business because they just can't compete. Furthermore, you can hire away the best people. You have extra money. You can, you can provide all kinds of benefits. Again, like, you get sort of the economies of scale, even on a hiring level. So what you do is you hire away the best people, and you make it so that there's less available for the smaller companies. If worst comes to worst, you could just buy out your competition, the small company. Well, we have access to all this cash. Let's just throw some money at them, bring them in-house, and basically eliminate our competition. So basically, you get winner-take-all dynamics. So you get 1, 2, 3, 4, 5 large companies, and they don't compete with anybody else because they're huge. They always have access to more money. They can underprice the competition. They get monopoly economics eventually. A lot of companies have used a variety of these strategies. So Amazon and Walmart, for example, underprice everybody. That's been their strategy. Google and Facebook, they just pay for the best engineers so that they don't make competitors, right? And they've been raising the salaries of the coders for more than a decade now, and it's just gone up and up and up as a way to make startup costs more higher and higher. And of course, all of these companies have acquired smaller competitors as a way to get rid of competition. So you have a lot of different ways in which you can use the money advantage that you have. So you get only a few companies, and once you have that, now you can use a regulation to make those advantages permanent, and you get ossification of lots of industries. There's a reason why plane travel has not improved at all since the 60s. The amount of time it takes to go from New York to Berlin, for example, is actually longer now than it was in the late 60s. Why? Well, the airplane technology is pretty much the same. Why? Because the large companies want it that way. They don't want to innovate. They just want everything to stay the same. So they get various government regulations that make it very difficult to compete against the large conglomerates. And I'm not just talking about the airlines. In the U.S., there's more or less 3. There's Delta, United, and American. In other countries, I think in Germany it's just Lufthansa, basically the major one. Maybe there's a couple of smaller competitors or whatever, but the national airlines or whatever, there's usually maybe 1 or 2. It's not just them. There's only 2 commercial airline manufacturers in the world right now. It is Boeing and Airbus. That is it. There's nobody else that is even creating large planes. So of course you're not going to get innovation. They have very little incentive to innovate because they're always going to have a market to sell to. All of these airlines need planes, and they're the only ones that by regulation are allowed to essentially create planes for them. So they more or less have a monopoly. And there's all kinds of interesting tech in drones and stuff like that. You could probably use drones to transport people, but there's no way any regulator is going to let that happen. So they don't, none of that technology actually gets developed. The Concorde was another one that, was an advance, but it just sort of dissipated because the ossification of industry, which happens under fiat money, because you only have these 3 or 4 large companies that control everything. So that's what we have, and that's the really sad reality that we're all up against. Is we're at a point where ossification has done its job. You only have a few companies that do the same thing over and over again, and we're starting to go backwards. Everything is getting harder, more expensive. We're getting poorer, and they're making it out to be something good for the environment or something, but really we're all just kind of getting poorer. That's what it is.
So you're talking about fascinating how you lay out the problem that is fiat system, basically, in the end. Do you think this has been different, for example, on a gold standard? And do you think that Bitcoin is a way to solve this? Like, is this the solution? Because on a Bitcoin based financial and economic global system, this will not be the case. Like, there will be more smaller companies again, more competition, and so forth.
Yeah, absolutely. And the reason why these companies can sort of stick around and make maybe nominal returns, but not real returns if you index it to monetary expansion or even inflation, is because of this access to fiat money. They can always sort of get by, scrape by, and because they're so large, they get Cantillon effects and so on. They can last for a very long time, and even if they go bankrupt, they get bailed out. The three major U.S. airlines, the United, American, and Delta, have all filed for bankruptcy since 2000, right? And they get somehow they get revived. They're all zombie companies at this point. They just keep getting revived whenever it's convenient, and for whatever reason, a lot of airlines become sort of like national status symbols for a lot of countries. So British Airways, I think, has been bailed out, and Air France, and a lot of these airlines are not that profitable. In fact, like most of them are actually banks, and this is something I point out specifically about airlines, is that they use airline miles as essentially a bank. So they can issue new airline miles whenever they want and sell them to credit card partners or whatever at a certain, like a penny a mile or something, and they could issue as much as they want, and they do whenever they're in a financial pinch, just distribute tons and tons of airline miles and sell them to credit card companies, or I don't know, rental car companies or magazines or whoever, and then collect that money and use that to they bring future revenue forward through airline miles. And then when it comes time to have to, when customers are trying to redeem them, they make it more and more difficult or debase the airline mile. So they play all of these like weird fiat games to stay in business, essentially. And, one of the things I point out in the book is that we got to sort of peek behind the curtain a little bit during the pandemic. So I believe it was American Airlines that needed a large loan. And they needed a loan because obviously people stopped traveling during the pandemic, and they needed a loan. Except instead of using their hardware as collateral, like planes and stuff like that, the investment banks thought that would be too much of a risk, because obviously the travel might not continue, and who knows if there's like whatever. So they use their airline miles programs as collateral. So
that's almost like FTX used FTT.
Kind of. And that's what they used. Now, what was really fascinating is that they had to figure out a valuation for these airline miles programs, right? So it's like AA Advantage. How much is that thing worth? And they came up with a valuation that was greater than that of the airline itself. So American Airlines stock was maybe like, the market cap was maybe $5 billion. I forget the exact number, but then they valued the airline miles program at like $8 billion, which is kind of like finding out that your kitchen is worth $800,000 when your house is on the market for $500,000. It doesn't make any sense. So what is going on? Well, it turns out that for them, the ability to print money is that valuable, and they recognized it, and they realized, like, actually the plane, like, taking people from point A to point B is actually kind of a lost leader, right? They lose money on every seat. It's the ability to bring revenue forward through sales of airline miles that's actually the thing that's valuable. And they did a similar valuation on Delta's airline miles program and the United airline miles program. This is all documented in the book, and the airlines are the original altcoin chapter.
Right. But they're utility tokens, right?
Yeah, that's basically what it was. Except, all coins are obviously worse because you can't get free flights or anything like that. But that was the idea, was to that's how valuable it's become, that the airline miles program is really the driver of the company. So think of airlines more as banks that use flights to discharge their debt than airlines that have airline miles programs, because that's how these companies are run. The miles programs are way more valuable.
And so how is Bitcoin changing this? Like, what's the...
Yeah. Yeah, that was the original question. I had forgotten it, going on my rant there. But yeah, so the way that Bitcoin changes things, and if you look back during the gold standard era, La Belle Epoque, you find that there's a lot more competition, a lot more sort of like bidding up for capital and so on. With fiat money, you can create capital out of thin air, more or less, by stealing it from everybody else. Under sound money, what you get is a lot of people wanting capital, but it being very expensive. So it becomes there's more at stake, if you will. So if you are creating a new company, well, you're going to have to take out loans that are pretty expensive, which means that you better be very careful about the business that you're actually starting. So you're going to be, instead of creating WeWork and wasting, however many billions of dollars, you create businesses that are going to get you cash flow positive very quickly. They tend to stay a little bit smaller. There were a lot more businesses that were smaller because you don't have this access to these debt facilities that give you these advantages. There's a lot more innovation because people are using their own money to do this stuff. Right now, we have this weird ecosystem of startups where you get other people's money to fund your, startup idea. And really, all they want you to do is get to become a unicorn, a billion-dollar company, so then you can get a lot of the advantages of a large company. That's basically been the strategy for startups for the last 30 years or so. But under sound money, you get smaller ones, and they grow organically. They have to grow through profit by having a good or service. And if you're going to scale up, you do it a lot slower than you do now, where every company, they just scale up as quickly as possible, even if it doesn't make any sense, like the WeWork thing that I mentioned before, where you do a lot of this stuff through, where you grow through actual market demand. And, you don't do it through, fiat loans or whatever. So you get very different incentives, right? When you have hard money, large companies don't have nearly the advantage. And in fact, I point out in the book, large companies actually have a lot of problems. And you ask any management consultant that's gone into a large company, they're like, yeah, we can fire half these people because they're not doing anything. And the company would run fine. And, there's no better example than what Elon Musk did to Twitter. He fired 90% and the site still ran fine. Right? Like, though it didn't crash. It did, like, what the heck were those 90% of people doing? Large companies have a lot of stuff like that, where you get a lot of rent seekers, a lot of people that don't know what they're doing, or are, minimally providing, some permission for somebody or something like that. They're not providing value. And you get more of that, I think, past Dunbar's number, about 158 employees or so. It's very hard to know what everyone else is doing, so it gets easier and easier to rent seek. So large companies have, that's just one problem. There's a lot more outlined in my book. They have these problems, so they naturally can't compete with smaller upstarts, especially when they don't have access to fiat money, when they can't just underprice the competition, when they have to meet budgets and stuff like that. then you have a lot of different incentives at play that give more advantages to the little guy, to the entrepreneurs. And when you have more entrepreneurship, well, you have more goods and services. You have more interesting goods and services. You get development of all kinds of things. I mean, think about what was created in that era: the automobile, the plane, the motorcycle, and even going back before that with the steam engine and trains and all this other stuff. All the innovations of the 20th and 21st centuries are sort of, add-ons to those very original things. And they've all been more or less ossified through corporations that don't want any competition. So, you get rid of this edifice of fiat money and you make companies have to make a profit in the market. You get a lot of good things, and you get better ideas, you get more companies, you get more entrepreneurship, you get way better things, and that's what we had during the golden age, La Belle Epoque.
And also less under sound money, also less bad things can be financed just by printing money. For example, wars, like all these huge wars can basically only be financed because the central banks can just and the governments therefore can just create the money to spend for these billions and billions of weapons and everything, because the taxpayer, the people would not, only with tax money this could never be financed, and people would not want to finance that. It's just really, how much do I need to print? And that's also why in the last 3 years, or partly of this is why in the last 3 years 80% of all the USD has been printed. Like it's fucking crazy. Like can't really. If people are talking about this for decades, I mean, we don't have a gold standard now for 50 years, and people are always like, no, now it's gonna pop, but it's never popping. Like, how do you see? And maybe this is also something that you cover in the book. Is like, how is this moving forward? Next 10 years, 20 years, is this phase going on, or is Bitcoin finally gonna stop this?
Yeah, so, I outline in sort of the last or second to last section about the global incentives and how we got to the dollar hegemony that we have all over the world. So, this is kind of a historical accident, largely because of World War II and all of the gold having flowed back to the United States because the U.S. had industrial capacity that other countries around the world that didn't. So largely due to Lend-Lease and things like that, about 3/4 of all gold in the world was in the United States by the end of World War II. That back then, that's where international balance of trade was settled through gold. You had to ship gold to another country if you wanted, weapons and stuff like that. And boy, did they need weapons during World War II. That was a lot of weapons, and particularly through Lend-Lease and stuff like that. A lot of that gold flowed back. So Bretton Woods set the new world order, and it was essentially the U.S. gets to keep the gold, and everyone else has to use dollars, and then and central banks can convert those dollars to gold whenever. But of course, that ended 27 years later with 1971 and the Nixon shock. Now, the last 50 years has been built on the petrodollar standard, and this is based on the fact that the world needs the dollar to buy oil. And as long as you had that, there was always going to be demand for the dollar because you can't buy oil otherwise. And pretty much everything requires oil in some way, and not just the things you're thinking of, which is transportation, gasoline, jet fuel, things like that. But also you need oil to produce plastic. Almost every industrial product that you can think of, everything that you have in front of you, this mic, this keyboard, this computer, they have they have products that use oil as an input. So it's really hard to get out from under oil because like pretty much all manufacturing requires it as well. And that's been the basis. Now, what's happening now is we're starting to see cracks in this very strong petrodollar system that's been in existence for about 50 years. The U.S. has, held it together through a lot of wars in the Middle East and things like that to stabilize the oil stuff. The U.S. has had to do things that Saudi Arabia has wanted them to do, largely because the Saudis are the linchpin that creates the dollar demand through pricing it in dollars. So that's basically been what's been happening. But the cracks are starting to show with this recent stuff in Ukraine, because the U.S. has decided to financially deplatform Russia. And Russia, even during the Cold War, the USSR was still kind of on a dollar standard. And it's crazy because they needed resources from other countries. And they had all these like communist parties in various countries in Europe, and they were able to bank with them and use the euro dollar system as a way to finance a lot of the things that they needed for their country. So even the USSR was on the dollar standard back when they were the USSR. But with this this is brand new because they really cut them off. Russia is now really off of the dollar standard. And this is something that Vladimir Putin, I think, has been going towards anyway. So in a sense, he wasn't shocked. And it seems like they were somewhat prepared for this eventuality by making alliances with various countries and starting this whole BRICS thing. But we're getting towards a bipolar world. It used to be a unipolar world from a monetary perspective. Everybody was on the dollar standard because of oil. We're now seeing that BRICS is going to become at least the second pole to this bipolar world, where they're courting the Saudis and other oil-rich nations. They have industrial capacity. Russia themselves, they have significant oil resources over their very, very large country. So it's all of that to say that the dollar as a global reserve currency is starting to weaken. Now, I don't think it's going to happen as a result of Ukraine or anything like that. It's just sort of the first crack. And, given the authoritarian nature of these BRICS countries, I don't think most countries are going to be trusting their currency, whatever they come up with, even if it's gold-backed or whatever. Are you really going to trust Russia or China? Not really. It's going to be a very difficult sell. But they have enough among themselves, and they are large enough among themselves that they could do sort of bilateral trading and use something else to settle the balance of trade and so on. And if that happens, well, the dollar demand sort of globally goes down because it's no longer used for oil and it's not necessarily the settlement currency. At that point, I think it starts to crumble. And it's taken 50 years, but I mean, it only took 27 for sort of the gold exchange standard to go away. Mm-hmm. 50 years is actually quite a long time. And they've used all kinds of financial tricks, but you can see the cracks forming. One of the examples I like to give is that 1989 Black Monday, 1987 Black Monday, this was a stock market crash in the United States where the Dow Jones went down by a third, right? 33% crash in one day. And a lot of people lost money. So what does the Fed do? They lowered the interest rate from 5.25 to 5%. They lowered it 1/4 percentage point, and everything recovered. That was it. That's all that was needed. All right. 1992, big recession. All right. The Federal Reserve realizes they need to do something to spur the economy again. This time, they bring it down from 5 to 3, right? 2 percentage points. Makes everything good again. All right. 2001, post 9/11, you have another economic crisis. There's, obviously a big slowdown. They have to bring it from like 3 down to 0, more or less. That makes it prosper again. 2008, you have another crisis. This time, that there's no more, turning of that knob. It's already at zero. Where do you go? So they start using quantitative easing. They're now buying assets on the market and putting it on their balance sheet. And this is another trillion to $2 trillion of injection into the economy through quantitative easing because they can't lower the rates enough. And that's what it took. This particular one, they're trying to turn the knob back, right? So they have some more room to turn it back whenever you get an economic slowdown. I don't know if this is going to work. They're trying to get the rates up past 5 so they can, turn it down. They have room to turn it down to 3, and hopefully that spurs it or whatever. I don't know if that's going to work. I really don't, because the rates, you need to get into like a stable sort of like economy at 5% for that to work. We're not at that. Everybody is expecting rates to come back down, and they're planning for that as part of their business plan. It ain't gonna work unless you keep it for 5, 6, 7 years, and then maybe you can do that. But that's going to devastate the economy for 5, 6, 7 years because you have so many zombie companies and so on. So either they die or the Fed lowers rates faster, and then you get sort of the hyperinflation scenarios that you get. So a lot of different forces at play. You got bipolar monetary world, got interest rates, recession possibility, the political environment. I think it's happening. Will it take 6 months or 10 years? I don't know, but it is happening. I just know that it'll probably happen gradually and then suddenly. We haven't hit the suddenly yet.
No, but maybe as soon as next year, when we have like the whole BlackRock ETF and the other Bitcoin spot ETFs coming, so the demand is going to skyrocket from like institutional players, and at the same time we'll have the halving, where probably now everyone will get that, okay, this is just going to get less and less supply. And already now we have close to 15 million Bitcoins out of these 21 million. So I think around 70% is held by long-term holders, so there's not going to be so much liquidity. So that's, I think, this liquidity crunch could also spur this sudden effect. But yeah, it's definitely going to be super interesting. Now I want to end, because we haven't really talked about your book. I think a lot of these contents have been covered in the book that you just mentioned. But just for for closing this, can you give us the pitch of like, what's the name of the book? Why did you write it? Who did you write it for? Like, who should be the readers? And just a quick summary of what people can expect.
Yeah, the book's title is Fiat Ruins Everything. And unlike my other 4 books, which were all aimed at people outside of Bitcoin to come into Bitcoin, this one is aimed squarely at Bitcoiners. I want Bitcoiners to understand just how bad the fiat system is. And that's how the book is organized. It makes the argument that Bitcoin is way more moral than fiat money. Fiat money is actually an immoral, evil money. Then we look at the incentives at the individual level. What happens when you don't have a savings vehicle? We look at incentives at the company level. Why are these companies so huge, and so on. The national level. What do governments do now that they have access to fiat money? And then the global level, the dollar hegemony. Why global politics is the way it is. And then finally, I talk a little bit about altcoins and fiat and how Bitcoiners are beset on both sides by people that are trying to take Bitcoin's good name and use it for their own benefit. Unfortunately, that's the strategy of altcoiners, and it's done tremendous damage. So that's the audience. That's the basic book, and I have a lot of essays in there, and you can kind of skip around as you need to. If there's a particular thing that interests you, I have a section of Fiat Ruins Science, and Fiat Ruins Art, and Fiat Ruins Families, and Fiat Ruins Work. So whatever you're interested in, you can just go read that one chapter and let it absorb or whatever. It's a fairly thick book. It's the thickest book I think I've published. Even longer than Programming Bitcoin. It's 340 pages, 90,000 words. So there's a lot to read in there. But I try to make it entertaining. It's not boring. It's a lot of information that you can take and realize that especially during a bear market, that Bitcoin really is a good thing, and that holding it for the long term is the right move.
Absolutely. I'm definitely gonna get a copy, and I'm really looking forward to read it. Hopefully before we meet in Amsterdam, and so we can get a bit more in details. And I'm glad that apparently most of the topics have been covered actually in our podcast.
Just some. We didn't talk about art or science or education. Well, we talked a little bit about education, but yeah, there's so many things that we didn't cover that I think fiat absolutely ruins, and I make those arguments in the book.
So if you think, that's my last question that I ask all of my guests, if you think that fiat is crap, then you probably don't save in fiat. You're a Bitcoiner, so you probably save mostly in Bitcoin. So what percentage of your wealth do you hold in Bitcoin?
Pretty much most of it. I've been on a Bitcoin standard for years now, and this is the interesting thing about Bitcoin. It starts as a small part of your portfolio, right, of your net worth. It very quickly overtakes you if you're in it for any length of time. So I've been in it for 12 years now or whatever, and it just gets to be a bigger part of your portfolio. So at some point it overtakes you whether you want it or not, as long as you're holding. And that's certainly been in my experience. And I have my own business and stuff, so I take all payments in Bitcoin, and I try to avoid fiat wherever possible. But if I'm getting paid in fiat, I'll often convert it to Bitcoin and just leave it there until I need it. I pay off my credit cards like as needed, and I convert enough Bitcoin and so on. And I think that's the way I choose to do it, because I really believe that Bitcoin is sound money and way better than fiat.
Word. That was a very insightful and inspirational conversation. Thank you so much, Mr. Jimmy Song, for coming on.
Well, thank you for having me, and hopefully, maybe you can put German subtitles or something, so you can get
no, we have
the German community,
English-speaking audience. That's all good. We're
okay, all right.
In all Europe.
Okay, yeah, it's always good to get some content out there in different languages and so on. So,
right.
Yeah.
Cool. Thanks for taking the time, Jimmy. Talk to you soon.
Thank you.
Bye.
All right.